Good afternoon. Welcome to Midcap Radar live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me, as always, is Vivek Iyer. And a sharp fall in the last couple of minutes was what we are seeing. The Nifty is down more than 200 points, off around 180 points from the day's high as well. The initial idea was we are shrugging off the tariff concerns, but that doesn't seem to be the case now.
That's right. Good afternoon, Sonal. And it's a red-looking screen. The mid-cap and small-cap indices are bearing the brunt of even more intense selling pressure, especially in the last hour. Like you mentioned, the advanced decline ratio, very weak. But we have a lot lined up on the show, an important corporate conversation as well. So let's start off with the top headlines. Trump's decisions to hike tariffs on imports of Indian goods to the US from 25% to 50% hurt sentiment, with investors hoping for an early resolution of the differences. Nifty Sensex slipped to the day's lowest point. Metals, oil and gas, along with Realty, are the big drags. Mid-caps under pressure.
Bharat's forward focus after Q1 numbers. Consolidated revenue down 5% versus last year. Management tells CNBC-TV18 that aerospace is the one business they're extremely bullish on.
Prince Stripes under pressure after a muted Q1. Revenue down over 27%, while profit declined 80% sequentially. The company says strategic focus continues to remain on strengthening distribution network.
Muted Q1 sparks sell-off for GNFC. Revenue declines 21%, while net profit is down by 32% compared to last year. Company says annual turnaround at Bharuch complex has impacted financials.
Exporters across sectors like textiles, engineering and gems and jewelry point to a standstill on exports after US announces a 25% additional tariff. Some even see order cancellations and fear a shift of orders to other nations. All hope for a speedy resolution of India's differences with America.
All right, those are the top headlines. We've been talking about that big fall in the markets, and that is something which is led by most of the sectoral movers as well. We do have the metal index, which is at the lows of the day. Energy, Realty, PSU banking names, mid caps and small caps, all of them are trending lower right now. Most of them are the day's low, actually. We'll talk about individual names in greater detail, but look at the fall that we're seeing, especially in the mid caps and small caps. 1% gone there, 1.5% gone on the metals as well. So let's talk about the individual names now. Hormuz is at the wall and is going to talk all about the mid-cap movers that we have in trade today. Hormuz.
Well, situations and times turn very quickly, and some resilience has now given way to capitulation, if you could call it that. The index at the lowest point of the day, so we'll start off with some losers then in the broader markets. Godfrey Phillips, after a breakneck run for the last 3 sessions, has now come off 9% in today's session, basically giving up everything that it gained in yesterday's trade. SKF at the lows of the day, RCF at the lows of the day, as is Forgings, losses of anywhere between 6 to 8%. And it's not as if there haven't been positive earnings reactions, and there have been some of them. Lupin's results have led to a strong move in a lot of the pharma names. Lupin still at the highest point of the day, 3.5% higher here. Kirloskar Brothers, and take a look at the move in Lincoln Pharma. At one point was up almost 8.5%, 9%. And Rain Industries too, seeing a gain of around 7% after its results. But on the flip side, GPT Healthcare, after its results, has slipped below its IPO price with this 11% fall. GNFC is down 8%, BHEL is down 7%, now the PSU name after another net loss, and Prince Pipes too has extended its losses, is down over 9%. Metals as a pack has been sulking today. Jindal Stainless, Hindustan Copper, NMDC, SAIL, almost every constituent of the metal index trading with losses of anywhere between 2.5% to 4%. And lastly, some stocks that are bucking the trend and are on the volume side. Look at Stovecraft, look at ITI. It's come off the highs of the day, still 6.5% higher. Avalon Tech won an order yesterday, is gaining around 6.5%, and CESC too seeing some gains on very strong volumes. Back to you guys.
Thank you so much for that, Hormal. You've managed to find a few specks of green in what is otherwise a very red-looking screen. But before we take that short break, here's a reminder for our viewers. Unlock a world of exclusivity, expertise and influence. Become a member of CNBC TV18 Access, a premium members-only experience on CNBC-TV18.com. The membership includes access to CNBC TV18's flagship events, interactions with our journalists, along with curated studio tours, e-learning sessions and masterclasses, along with curated lifestyle benefits. Welcome back to Midcap Radar. Well, Gujarat Narmada Fertilizers is one particular company that declared its results post-market hours yesterday. Ria joins in with more details.
Well, yes, Vivek, GNFC has reported quite a weak set of numbers in Q1 of FY26. The revenue and the net profit have decreased by around 21% and 32% respectively, both on a year-on-year basis. In terms of the segments, we've seen lower volume availability affecting the revenue in both of these segments, and specifically for the chemical segment, tough market conditions have prevailed for certain products, which had a negative impact on realizations as well. But the company has highlighted that in view of the annual turnaround at the Bharuch complex in April of 2025 and its consequential impact on the revenue and the profits of the company, the financials of Q1 are not comparable. They've said that this annual turnaround impacts the financials in terms of lower volumes, unproductive costs, as well as higher fixed costs, which are mainly for repairs and maintenance. However, the street is still not liking the numbers in terms of the impact on the profitability, taking a big hit on the margins as well, and the stock is down over 9% on the back of this.
All right. Thank you, Ria, for joining us with all those details. But we are not done yet. Prince Pipes, that's on your radar as well. How did the numbers look?
Well, yes, weak set for Prince Pipes as well. The overall revenue and profitability remained quite weak for the company this time around. Revenue saw a decline of around 4% on a year-on-year basis, and EBITDA and net profit both declined by 31% and over 80% on a year-on-year basis as well. Margins have also contracted by around 270 basis points in this quarter due to a continued drop in the PVC resin prices that we've seen all along. That has resulted in inventory losses for the company. But despite the volatility in PVC resin prices, the volume growth has remained fairly stable, up around 4% on a year-on-year basis. The working capital days have also seen an improvement, coming in at 93 days versus 98 days at the end of FY25. And going ahead, the company remains optimistic about a demand recovery going forward. But nonetheless, the stock is still down 8% on the back of these weak numbers.
Thank you so much, Ria, for taking us through the internals of both the GNFC as well as Prince Pipes. Well, on the flip side, Fortis Healthcare reported a strong first quarter with strong profit growth and healthy margin expansion. Earlier today, we spoke to Ashutosh Raghuvanshi, the MD and CEO of Fortis Healthcare, to discuss the quarter gone by and quizzed him on occupancy, revenue outlook and debt picture going forward.
The quarter has been good. We had about 69% occupancy during the quarter. We expect this to go to 72% over the next quarter and improve from there on. As far as RPOB is concerned, that is a result of the case mix. As we have seen is that our growth in some of the high-end specialities has been much faster than the core specialties. So oncology segment, for example, has grown very fast, and it is one of the largest segments for us now. And there the realization is typically higher, and that has led to a higher RPOB. So we expect that our momentum of both occupancy as well as RPOB growth will continue, and that should result in better outcomes in future. As far as our debt status is concerned, EBITDA to debt ratio is about 0.93 at the moment. We believe this is a comfortable ratio, but we don't expect it to go up from here. It may marginally go up during this financial year, but it is expected to come down by the end of this year. Most of our brownfield expansion, which we have about 900 beds getting added during this year, is coming from internal accrual. So that way the debt situation is pretty stable, and I think this is a peak for the moment, and we expect it to come down from here.
Okay, that's Fortis Healthcare. Stock is higher 4% in a market like this. So that's the commentary coming in from the management as well. We'll slip into a short break now. Management of Carraro India will join us next to discuss their Q1 numbers and more. Welcome back. You're still tuned into Midcap Radar. Well, Carraro India, that is the management on our radar. Company posted a steady set of numbers with its margins expanding and the management guiding for a top-line growth of 8 to 12% going forward. Balaji Gopalan, who is the managing director at the company, is joining us now to take a few questions. Mr. Gopalan, good afternoon. Thank you so much for joining in. This time around, your exports grew by 5% on a YY basis, and you did indicate it is showing early signs of recovery after 2 subdued quarters. But now we do have a lot of updates when it comes to global tariffs as well. How much is your contribution coming in from the US markets? Is that update which has come by of 50% tariffs impact your order booking and the client commentary as well?
Yeah. Good afternoon, Sonal. First of all, thank you for getting me into your show. We have had a very good quarter as far as our exports are concerned. The overall market could give a different number, but the segment in which we are present and the kind of products we are exporting, there has been a good pull and good demand for our exports. And to that reason, it shows in the numbers that we have. Now, coming to that issue of the tariffs, that is currently very fluid, and we will not be able to give any concrete solutions or alternatives or a strategy for it, because we are actually very, very marginally affected by it, because Carraro India has just a 6 to 7% exposure to the US market. And what we are selling, the tariffs is not coming under our scope. It is managed by our customers. So to that reason, we are not really affected because the number of percentage of our exposure is low. Secondly, the kind of technology and manufacturing and the product that we are supplying over there, there is no replacement that is possible, because for a replacement like a product like a driveline or an axle, it takes 2 years for the validation to happen. So we are quite insulated, and it is absolutely not a concern for Carraro as of now. But we are looking at alternatives. We are always wanting to grow. So we are exploring other markets as well. But answering your question, there is no concern at the moment.
Okay, Mr. Gopalan, thank you so much for making that very clear. What we want to understand from you is the guidance that you had given at the start of year for FY26 was a growth of 8 to 12. Q1, there's been a revenue growth of 5%, so that implies a steep ask rate as far as Q2 and H2 is concerned. So are you maintaining the guidance? And secondly, you had also guided that you would see 100 basis points margin expansion every year for the next couple of years. So is that intact?
Yes, that is very much intact, and we are very aggressively pursuing that guidance that we have given. And all the indicators that are in front of us are supporting us that we will be achieving it. There is absolutely no going back in what we have said. 1% increase in EBITDA for the next 2 to 3 years. And this year, we will surely close at 11%. So we are well within our plans.
So, Mr. Gopalan, what makes you confident on this? Do you think second half will be better than first half? Because if I see the split, your biggest contributor, which is construction vehicle segment, has done well. There's a 16% growth there. But agri segment has seen a decline. What will these segments be like by the end of this fiscal?
Yes. See, we are looking at, as I said, a growth of 8 to 12% in the current fiscal. And surely the good monsoon now will spur up the rural economy, and we are expecting a growth. Already our order books are increasing for the four-wheel drive market that we are adhering to. As a market, the four-wheel drive tractor market is already expanding much faster than we were expecting. And we are having a good export orders also, like I said, for the teleboom handler business that we have got into very recently. So all in all, order books from our customers who are approaching us, they are quite excited that the forward-looking months are very, very encouraging for them as well. So 10 to 12% growth in our revenue is something we are quite confident about.
Understood that, Mr. Gopalan. So sticking to your guidance firmly, 11% top line is what you have hinted at. Well, we want to understand, update as far as 3 new product platforms that you had earlier highlighted. The first one is the high horsepower transmission. We understand that the pilot study has been completed. When does it get on stream? What are the kind of customers you've managed to open? And also CVTs as well as e-tractor transmissions. What is the outlook here? Can you give us and can you quantify the kind of growth that you can see from here?
Yes, I will go to higher horsepower. And higher horsepower, the CVT, the continuous variable transmission, that is nothing but an automatic tractor gearbox. So the CVT and high horsepower are gaining momentum. We are exporting the high horsepower to major OEMs in Europe, and we are routing it through our headquarters, where we have a tractor building facility also, which is outsourced from the big OEMs in Europe. Now, coming to the CVT, that has been successfully established, and serial production should start in the month of November. We have already supplied about 30 transmissions, and they have been very, very successful. While our volumes are okay, I think the investors need to know that the focus, because we are satisfied, we don't have a threat or a risk from US. We are not looking at any market being shrinking. So that side of revenue is taken care of. But the strategy is to improve the marginality. And we are working very strongly on marginality, and that is adding to the EBITDA guidance that we are giving. Coming to electric tractor, 2 years back, if you had asked me electrification in off-highway, that was something of a distant possibility. But very surprisingly, in the last 1 year, we have had major inquiries, and we have bagged a successful project on electric tractors for India. The feasibility study has been completed. We have got the contract for the configuration of the tractor, and we should be productionizing it. The customer should productionize it in early 2027 or mid 2027, with a volume projection of roughly starting with 10,000 tractors going up to 25,000 tractors in a period of 2 to 3 years. So the going is good. Futuristic technology, advanced technology absorption in India is happening because of food security requirement and farm efficiency requirements. And Carraro is exactly in the right segment where there is a demand for these technologies.
Thank you so much, Mr. Gopalan, for joining us, giving us a sense of how exactly Q1 panned out, sticking to your guidance for FY26, and what are the kind of new product platforms that are. Thank you once again, and wish you all the best for the rest of FY26. Well, a slight or a wee bit of recovery is what we're seeing as far as markets are concerned. One particular stock that's recovered very sharply from the day's low is Hero MotoCorp. Remember, results did come in post-market hours yesterday, and that particular stock has recovered very sharply. That stock high at the day's lowest point. What's not doing so well? Well, some of the defense names like Solar Industries, those are some of the stocks that are seeing a bit of selling pressure near the day's lowest point. But with that, it's all the time we have on this edition of Mid Cap Radar Mutual Fund Corner when we return.